So the market has been crashing for a while, and Dogecoin holders are extremely worried about where we're headed from here. In this video, I'll talk about two incredible things that happened for Dogecoin today despite the crash, and I'll go through some important new metrics. Let's start with some new data. According to a new study, 60% of European investors increased their investments in digital currencies by 50%. Cantor, the research firm that conducted the survey, studied the market in Europe, Asia, and Latin America. Also, according to this survey, investors in different continents continue to enter the crypto market. There is a clear interest not only in investments but also in savings. This shows that there is a clear trend to consider virtual currencies as an alternative investment and also a savings method. The results are impressive. 55% of the survey participants in Europe answered that they hold cryptos. Moreover, 61% of them considered digital currencies as a way to diversify their investments in the long term. This increasing interest in virtual currencies as a way to find new investment opportunities can also be seen in the 50% increase in crypto investments in the last year. And another metric suggests that the bottom is quite far. So the length of Bitcoin's 2014 and 2018 bear cycles suggests that Bitcoin has a long way to go before it can carve a bottom. Crypto trader Rager pointed out that after 190 days from the all-time high, Bitcoin still had another 150 to 200 days until it hit the bottom last couple of cycles. If time is any indicator, it could be another 6 to 8 months before we hit a bottom. In terms of price, Rager says that he's keeping an eye on the 200-week moving average, which he notes has kept Bitcoin afloat during the 2014 and 2018 downtrends. He said, "If Bitcoin price does drop and bounce at the 200-week MA like previous bear markets, consider that a good thing. It would only be a drop of 68% from the highs. Previous bear markets had 84% plus pullbacks. A minus 84% pullback in this bear market would be near 11,000 for Bitcoin." Now before we talk about more data, let's look at some incredible news for Dogecoin. According to a statement, Lavu and Verifone's cross-distribution agreement would seamlessly integrate their technologies to enable enhanced payment options at thousands of eateries. And because of this, Dogecoin, as well as other major assets like Bitcoin and Ethereum, will be accepted at thousands of eateries. It says here that restaurants will be able to more readily match quickly developing customer behavior, most notably the rapid migration to digital and split payments. And I think this is something that'll bring us closer to Doge's mass adoption that I've been talking about. There's another great news for Doge, but before I talk about it, let's look at some really bad news from today. So SEC Chair Gensler has issued a new warning for all altcoins, including Dogecoin, after the Luna collapse. He said that, "I think a lot of these tokens will fail. I fear that in crypto, there's going to be a lot of people hurt, and that will undermine some of the confidence in markets and trust in markets writ large." Moving on to some more metrics, Jurian Timmer, the director of global macro at Fidelity Investment, looked at various metrics to determine if Bitcoin is attractively valued at current price levels. In March 2021, Timmer published a 12-page research paper on Bitcoin. He came up with several conclusions, including Bitcoin has gone mainstream, already considered a legitimate asset class by more and more investors. Bitcoin has both a compelling supply dynamic and demand dynamic. Bitcoin is gaining credibility, and as a digital analog of gold, but with greater convexity. Bitcoin will, over time, take more market share from gold. Timmer said that if gold is now competitive with bonds and bond yields are near zero, perhaps it makes sense to replace some of a portfolio's nominal bond exposure with gold and assets that behave like gold. He also asked a very important question. If Bitcoin is a legitimate store of value, is scarcer than gold, and comes complete with a potentially exponential demand dynamic, then is it now worth considering for inclusion in a portfolio? Despite the many risks discussed, including such factors as volatility, competitors, and policy intervention, for some the answer may well be yes, at least insofar as that yes applies only to components on the 40 side of 60/40. For those investors, the question of Bitcoin may no longer be whether, but how much. He then talked about various other metrics. First up is the Bitcoin-Gold ratio, which I see as a barometer for how this aspiring digital store of value is faring relative to that original store of value. The Bitcoin-Gold ratio is now resting on major support in the form of the 2017 high as well as the 2021 low. At the same time, the detrended Bollinger Band shows that the ratio is now at 2 standard deviations below trend, which is a level that has contained the last 3 declines. Next up is the dormancy flow, which roughly speaking is a measure of strong vs weak hands. The entity-adjusted dormancy flow from Glassnode is now at the lowest level since the 2014 and 2018 lows. Next up is valuation. With the current swoon to 25K, Bitcoin is now below the price currently suggested by both my mobile phone-based S-curve model and the more conservative internet adoption model. He went on to look at 2 other of his favorite metrics before concluding, "All of the above tells me that Bitcoin is not only at solid support, but also attractively valued. The one caveat is that the Bitcoin-sensitive equities need to confirm any recovery for Bitcoin." So there you have it. We have many reasons to stay bullish in the long term, but still, there's a lot of uncertainty when it comes to where it'll go in the short term. Also, according to Rastany and other industry analysts, the crypto market could follow in the footsteps of 2018. It was predicted in early 2018, a month after Bitcoin hit all-time highs of 20,000, that markets would not move any higher and that an 80% retracement was imminent. A year later, Bitcoin hit local lows of $3,100, which was a drop of 84.5%. But still, on Bitcoin's chart, the Elliott wave is currently taking shape. The market action will soon turn bullish, and a break above 45,000, which is the first major resistance level, would be very bullish. Rastany predicts Bitcoin will reach a new all-time high in the 74K range if Elliott wave theory holds true. Moving on, according to Rect Capital, there is a possibility for Bitcoin to witness another huge price drop, and if history repeats itself, it could go as low as 15K or even lower. He was talking about a Bitcoin death cross here. So on a technical chart, a death cross happens when the 50 EMA crosses under the 200 EMA. Bitcoin has gone through multiple death cross cycles in the last decade, each in a different year. Also, in the past, Bitcoin experienced an even greater correction following the death of the cross. For example, after the death cross in 2013, Bitcoin corrected 70%. After the death cross in 2017, it corrected 65%, and after the death cross in 2019, it corrected 55%. But the important thing to note here is that following the death cross in 2020 and 2021, the Bitcoin price witnessed a significant increase. In both cases, the death cross happened at the bottom. Also, according to CryptoQuant, the number of coins held in all exchanges' reserves is at a 3-year low despite spot exchanges experiencing a slight increase in inflows. The data corresponds with insights from Glassnode, which recorded a steady inflow of coins into centralized exchanges that triggered last week's massive sell-offs. CryptoQuant further highlighted that investor sentiment is more dominant toward the short position, indicating that the market is over-leveraged. Meanwhile, open interest has increased by $1 billion ahead of the $640 million Bitcoin options expiry on May 20th. Now coming back to Dogecoin, according to Whale Stats, Dogecoin has emerged among the top 10 digital currencies that the largest BNB whales are buying. BNB whales currently hold a total of more than $27 million worth of Dogecoin, which is around 2% of their comprised portfolio. While 2% seems meager, being in the top 10 is a really big deal. This just suggests that Doge is still a hit among the big money players, and this is why I'm still very bullish in the short term. When do you think we'll get out of the consolidation phase? Let me know in the comment section below.